Florida's housing market has become one of the slowest in the country over the past few years, with homes lingering on the market with dropping prices and fewer buyers showing interest. Thank you for watching Wink News at 4. I'm Amanda Hall.
Orlando's real estate story was supposed to be the Florida dream. Warm weather, strong jobs, steady growth, a market that seemed bulletproof. But in 2025, that dream has cracked wide open. Deals are falling apart in record numbers. Buyers are backing out, and the once unstoppable housing boom has hit a wall. So, what caused America's tourist capital to go from a red-hot seller's paradise to one of the most fragile housing markets in the country? When the boom began, just a few years ago, everything looked stable. In 2019, Orlando's median home price hovered just under $280,000. It was a market built on balance. Retirees chasing sunshine, families relocating for jobs in tourism, healthcare, and tech. The city's growth was predictable, its costs manageable, and its reputation steady. Then the pandemic hit, and everything changed. Remote workers flooded in from New York, Chicago, and Boston, armed with cash and ready to buy. Open houses had lines down the driveway. Listings were selling within hours, sometimes sight unseen. By the summer of 2022, the median sale price shot past $390,000, a jump of more than $100,000 in just 2 years. The brokers called it crash-proof. The ad said, "Buy now or be priced out forever." And for a while, it really looked like nothing could stop Orlando's rise. The pressure builds. But beneath the frenzy, cracks were already forming. Prices were rising faster than paychecks. By mid-2022, the average household needed nearly 45% of its income just to afford the median home. Still, buyers kept coming, and builders kept building. Then, one of Florida's biggest hidden costs came roaring to the surface: insurance. For years, premiums had been a quiet line on the budget. Now, they exploded. By 2024, annual premiums for a typical single-family home in the Orlando area topped $7,500, some even higher. And it wasn't just price. Policies were getting harder to find. Insurance companies were pulling out of Florida altogether, leaving homeowners scrambling for coverage, or losing deals at the last minute when lenders refused to approve uninsurable homes. The math no longer worked. At the same time, borrowing costs doubled. Mortgage rates that were once under 3% climbed to 7%. A $400,000 home that once cost around $1,600 a month to finance suddenly demanded nearly $2,700. Buyers looked at those numbers, the insurance, the taxes, the interest, and walked away. By early 2025, nearly 1 in 5 home sales in the Orlando area was falling apart before closing. That's double the national average. Lenders got tougher. Underwriters began rejecting loans for homes with older roofs or high premiums. Appraisals came in lower than contract prices, creating gaps of $25,000 to $30,000, money most families didn't have. And every time a deal collapsed, another for sale sign went up. The glut arrives. By the middle of 2025, inventory in Orlando exploded. Active listings climbed more than a third for single-family homes and nearly 80% for condos. Some neighborhoods now have more for sale signs than mailboxes. Builders who once had waiting lists are sitting on finished homes they can't move. Major developers like Lenner and D.R. Horton have slowed projects, offered cash incentives, and even mortgage buydowns to keep sales alive. But demand just isn't there. The condo market has been hit hardest. Prices are down more than 25% year over year. Association fees have doubled, insurance costs have tripled, and in many buildings, sellers can't find buyers at any price. One Orlando builder summed it up bluntly: "We built for a market that doesn't exist anymore." The human cost behind the statistics are real people and real losses. In one case, a retired couple from Maitland put down $15,000 on what they thought was their forever home. Their insurance quote doubled from $4,000 to more than $9,000. When their lender refused to close without full coverage, the couple had to walk away and lost their entire deposit. Stories like that are everywhere now. Families caught in limbo, investors dumping properties they bought at the peak, sellers slashing prices just to escape rising costs. In Orlando's Winter Park area, zip code 32789, contract failures now top 25%. Homeowners who bought during the boom have seen equity losses of $60,000 or more in just a year. And as prices drop, appraisals fall further, trapping more deals in a downward spiral. A statewide domino effect. What's happening in Orlando isn't staying in Orlando. Across Florida, insurance unaffordability has become the #1 reason deals collapse, even more than mortgage rates. In Miami-Dade and Broward counties, average annual premiums now run between $10,000 and $15,000 for a standard home. Buyers are walking away before inspections even start. And longtime homeowners, many on fixed incomes, are being priced out of the homes they already own. The ripple is spreading west. Texas markets like Dallas and Houston are seeing contract cancellations rise. Arizona's investor market is retreating as insurance and holding costs surge. The same forces, higher premiums, stricter underwriting, falling confidence, are rewriting the map of American housing. What comes next? Experts say the full fallout hasn't hit yet. As inventory builds and insurance costs stay sky high, prices may have further to fall. Some analysts warn that Orlando's housing reset could last several years, especially if migration slows and tourism plateaus. But within every correction, there's opportunity. Buyers with patience and cash are starting to see real negotiating power return. Sellers willing to face reality can still move properties, but the days of bidding wars and instant equity are over. This market isn't dead. It's waking up from a fantasy. Orlando's story is a reminder. Even the sunniest markets can turn stormy overnight. When cheap money dries up, insurance disappears, and confidence cracks. No city is immune. So if you're buying, selling, or investing in Florida right now, look past the headlines and ask the hard questions. What's your real carrying cost? Can your insurance actually survive the next storm? And if not, how long before this correction spreads beyond Florida's borders? Because when a market built on sunshine starts showing shadows, it's time to pay attention. This is BuzzFrame. Stay sharp, stay curious.